I'm looking at taking the next trade. So for those of you that are here live, you should be able to participate. And in today's show, I'm going to show you exactly how you can take the exact same trade as me. And you can even get $50 for free by just taking it. So let's get straight into the show content. Much of the directional bias for the next move is going to be based around the USDT dominance. We're looking at it on a more granular scale over here on the hourly time frame with the expectation that you could possibly see a bit of a breakdown. Now, if you do get continuation and a breakdown over here, that could lead to a 7.67% move towards the downside. And if you do get that 7% move towards the downside, it should lead to an interim pump within the crypto markets. Now, everything comes with risk, right? High risk, high reward. There is going to be risk involved over here, but we are going to calculate the trade using a risk to reward ratio in a sensible approach. So for those of you that do want to take advantage and you do want to take this exact trade with me, go through over here to the description below, click on Phemex. When you click on Phemex over here, for the first 200 of you that do that, you'll be able to claim $50 for free, right? And when you put in a deposit, if you want to take a sizable trade, which I'll share with you what the trade is in a moment, you can make a deposit over there and they'll give you 20% bonus on top of that. This is only available using that link below. Nobody else has this particular campaign, right? So there's the $50, that's your sign-up reward, and then you're getting also 20% on top of anything you deposit. So let's get into what the trade looks like, why I'm thinking of taking this trade, and then we can get into the rest of the content. So USDT dominance, we timed the breakdown over here pretty well. We said when the order block occurred over there, we're looking at continuation towards the downside, and we got exactly that. Now you're consolidating into where the prior support was. So this was the area of interest where we said if we were short on USDT dominance, which means we have a bias that the rest of the market's going to flow towards the upside, well, this would be the area where we want to be a little bit cautious, and it worked out, right? You got a little bit of a bounce over there, but we led into a bearish retest, and now it's consolidating down into these lows, which does create the opportunity that if this consolidation continues, you're most likely going to see this grinding into support, leading into a deeper breakdown towards that 4.6% level. And if we get that type of move, that should create a nice little pump for the rest of the crypto market. But of course, it always comes with a but. We have to be a little bit cautious over here. And part of the reason why is because Bitcoin specifically has come into the bearish zone, exactly where you would expect a bearish retest to take place on the Bitcoin chart. And that's at the breakdown level around that $95,000 to $96,000 zone. So we do need to be a little bit cautious over here, but different charts are showing different things. Just because Bitcoin rejects and goes down over here doesn't necessarily mean that some of the other projects can't necessarily put in a bit of a bounce before then and move towards the upside. The most bullish outcome for these altcoins would be if you saw Bitcoin consolidate within this region, holding that level, or even possibly reclaiming and consolidating above the resistance zone. So keep in the back of your mind's eye when you do take this trade, it needs to be a calculated risk to reward where you at least remain somewhat cautious in the approach, because usually most coins don't trade counter to what Bitcoin does, meaning if Bitcoin goes down, most coins do go down. Now, the coin in question over here that we're looking at is actually Ethereum, and I'll show you why in just a moment. First, let's look at the ETH-BTC ratio, which has come into a very, very key support. And it's also on a TD sequential 9 bottom, right? Over there, you got a 9 bottom. It's got the little tick mark over there. What this simply means is trend exhaustion, right? And you're looking for a little bit of a short-term reversal. The short-term reversal is enough for us to take a quick in and out trade and possibly bank some profits. Remember, this is a risk to reward setup, right? We're risking, for example, 1 to potentially gain 3. As long as we keep doing that successfully over time, we should be well on our way to make profit. So it's a little bit more for the advanced people who want to trade on Phemex. If you do want to take this trade with me, guys, sign up now. You should be able to quickly claim your sign-up bonus before we get to the end of this video, and then you can actually enter into the trade with us, right? So coming into key support, potential swing failure pattern as well on some of the high time frames like the weekly. And on top of that, you do have this RSI retest. There it is. I guess credit where credit is due. This was highlighted by Benjamin Cowan. And I found that to be very, very interesting because it's in alignment with many of the other things that we're looking at, right? You can see pretty much just a tight range over here, or large range, I should say, but respecting the highs and the lows. And coming into that key level, ETH BTC is indicative in alignment with the TD sequential 9 buy. that we might be due for a little bit of relief. Remember, we have an inverse parabola taking place over here, which means when this does move, it will move very, very, very quickly in the opposite direction. And again, that becomes tradable, right? So I've looked at the volume profile on the ETH BTC chart, and you can see the point of control is all the way up here at 0.069. But look at the volume that started to come in recently. Look how high that volume is coming into this key area, showing that there are definitely some smart money people which are possibly allocating into this ETH trade, right? And building a bit of a position over here. Again, you have a valid risk to reward with your tight stop loss slightly below. We'll show you what it looks like specifically on the USD pair. Now, also, if we have a look at the liquidation heat map and we actually zoom in over here, and this is looking back over the last 6-month period, and we're focusing specifically on the USD pair, so Ethereum against USD, you can see $1.61 billion worth of liquidations sitting above at the $2,117 level. What that means in simple terms is if they can spike price up above $2,117, you're going to stop out or liquidate $1.61 billion worth of shorts. That's a pretty sizable amount, right? And we know that in a low liquid environment, price tends to gravitate towards the area where there is liquidity. Now, speaking of liquidity, remember liquidity and volume almost go hand in hand. And this is one of the reasons we do have to maintain a cautious approach specifically with Bitcoin, right? Because Bitcoin has moved up into this area with declining volume over the last 2 to 3 days. The first bit of the move was met with good volume, and then the volume started to diminish, which means it could be a bit of a bull trap, right? It's always a possibility. But again, this is risk to reward setups where it's still a worthwhile trade to take. So looking at ETH over here. Now, if you look with your momentum oscillators over here, and you can see how the money flow started to increase following the at least the green triangle over there, and we can see what the prior runs looked like previously on Ethereum or USD on the weekly. This actually led to some pretty sizable moves. Now, we're not even considering this entire part of the bull run over here from the low once we printed that all the way to the top. Once you got that green dot over there and the money flow started to increase like that, well, what did you get? You actually put in already 122% move before pulling back and then continuing into a massive, huge pump. That pullback led into a high low, and then you had continuation, and that was in December 2019. Even the relief rallies over here, which were bear market relief rallies going into bearish retest that led into continuation of the bear market, printed something very, very similar, right? Green triangle over there, money flow starts to increase, price bounces 46.85%, pretty sizable, right? And then you have another one over here. You got your green triangle, the money flow starts to increase towards the upside. You put in 165% move. And now we got this one. So if we go on the lower case, you know, and we say, well, what happens if it puts in one of the lower bounces, a smaller bounce, right? Something like 40, 50%. Where would that take price action? Well, from the time when we started to get the signal over there, which was from the lows, plus the swing failure pattern on a weekly scale. Well, so far we've put in a bit of a bounce already, but 50% would take you up to $2,300. What's interesting about that is, of course, that would get you above this point over here where you would liquidate $1.61 billion worth of longs. So I think it's pretty interesting. Actually having a look at this, which I've just noticed right now, that's also another good sign for Ethereum bulls, is at least they managed to close above the 9 moving average over here. We're looking at the 3, which is the yellow, the 9, which is the green, and then we have the 30, which is the purple. If we quickly showcase what Bitcoin looks like, well, Bitcoin has recaptured all of them, right? So Bitcoin's had a very, very sizable move over there, looking really, really good. ETH is lagging. If you're looking at an ETH move to potentially even just target some of those levels, well, this is what you're looking at from current price levels up to there. You know, that's another 45% move before putting in resistance. And it's good to see that you've actually closed now above that 9 moving average. And we've started the new 5-day candle, which does increase the probability of why this could actually start to expand. So as we look at price action a little bit more granularly on the hourly time frame, we have this, right? Look at that. You're starting to put in the presence of negative funding. There you go, negative funding. What happened the last time we had negative funding? ETH started to move. The last time we had negative funding over there, ETH started to move. So you are putting in these small little bounces, right? I think also one thing that we can highlight over here, which maybe I can just quickly, let's not use this chart over here. We'll go on to our hourly chart. Here's the setup. This is essentially one of the things that we're looking at. So you've put in a nice move over here. And following that move, you can see a series of, there you go, higher lows. Let's just quickly, we don't want this whole extended thing. Just 1 second, guys. There we go. You're putting in a series of high lows. Look at that. And you have equal highs. So if ETH can start to reclaim above the previous month's open over here, which is possible, that could happen as soon as today, right? Let's tighten that up and we'll make it nice and big so you can see exactly which line I'm talking about. So you have price moving off the low. There you go. Up and putting in slowly high lows, high lows, high lows. And it looks a little bit like an ascending triangle, right? There it is, an ascending triangle. Where would this take you in terms of a measured move? Well, we can actually measure from the base of the triangle to the top over there. And if you do break above the previous month's high, well, that will take you to the next key point, which is approaching that downsloping resistance. And I'll highlight that to you in a moment. That's just under $2,000, right? And that's just the start of the trade. If you start to see some chasing coming along, where people start to chase price action, that could easily break through this. Remember, the general bias has been that we're targeting the yearly open. This is what we've been looking at all of last week and the week before that. We're looking at that on Bitcoin. Now, again, the only contrarian, at least, sign that we have right now is the fact that BTC is coming into a bearish order block, and we do have to remain very, very cautious. But I think it's a worthwhile trade to take since we have the possibility of ETH BTC bottoming, and it would be a bit of a hated trade that takes place. So ultimately, looking at your stop loss pretty much hanging below that order block that led into these high lows. So stop loss would be placed over here at 1674, right? 1674. You could go with a little bit of a looser stop loss. If you want to keep it really loose, I mean, the obvious stop loss would be below the Monday low. It all depends on how much risk you want to put on the table. And even if you did do that, and this trade makes it up to the yearly open, which is in alignment with what we're looking at over here, right? It's also in alignment where, in terms of hitting that 30 moving average, it's also in alignment with what we've seen previously following the green triangle over there, right? So I'll let you make the decision of how much you'd want to put onto this. For now, I'm going to keep it relatively tight for myself personally, even if it means getting stopped out and looking for another re-entry, right? But ultimately, we want to see the yellow box flipped into support. That was prior a support, flipped it, and we might be testing it as resistance. We need to see if you can gain acceptance above this level. We call this, remember, a deviation. Now, one thing I want to remind you of is if you guys do decide that you want to learn more and take your education a step further, we do also have Whale School, which is coming up in 2 days. For those of you that sign up to Phemex today and you claim your $50, not only can you take the trade with me right now, but on top of that, you can also get into Whale School for free, right? You don't have to pay the $2,000 over there. So the trade setup, right? Why am I taking this trade setup on Phemex? I wanted to highlight Phemex a little bit further for you guys, just to gain a bigger understanding for why whales are trading on Phemex. You get something called an A book and a B book, right? Most exchanges nowadays are B books, right? These are tier 2, tier 3 exchanges, and it comes with much higher risk. A book exchanges are most of the bigger exchanges, and the way that they work is you got a trader, a broker, and then a liquidity provider, right? You got a B book exchange, which is just the trader and the broker. The difference between these two is the following, right? When you're trading on an A book exchange like Phemex, there's no conflict of interest, whereas B books have a conflict of interest because the trades are internalized, meaning when you lose, they win. But when you trade on a tier 1 exchange or an A book exchange, trades are routed directly to the liquidity provider, and they're making their profits through spreads and commissions, right? As opposed to making their profit from the client loss. So more transparent, lower risk to the exchange, lower risk to you. This is one of the reasons that I've started to trade specifically on Phemex. They have all their proof of reserves as well over here. You can actually click on their cold wallets and you can see they backed more than 100% in terms of what's allocated on the exchange. So let's get into the trade, right? Let's talk about the trade. I'm going under the premise that you have a $100,000 trading account. I've just pre-filled this out. This is the Better Trader tool, which I discuss at length in Whale School. Remember, if you do join into Whale School, you know, this lesson, sorry guys, just 1 second. My YouTube is actually listening to us and it's just gone off and started to play our video back on my phone. Let's just quickly turn that off. So if you do join into Whale School over here, we discuss this at length, right? Risk management, how to calculate your position size. This is vitally, vitally important when it comes to taking the trade. So this is the setup over here. Our stop loss is 5% away. I'm going to risk 1.3% of the $100,000 trading account, and I'm going on 5x leverage. That means that my required margin is $5,200. I'm going to show you an interesting way that I'm taking this trade right now. Max amount that I stand to lose on this trade is $1,300, and the position size should be $26,000, right? So let's get into the trade. What trade am I taking, right? I'm taking a trade via a scaled order, and I'm going to do it as, on some exchanges, they call it an inverse perpetual. On this exchange specifically, they're going to call this an 𝗪𝗪𝗀𝗀𝗀𝗪𝗀𝗀𝗀. What this means, right, is I've bought Ethereum on the spot market. So I bought a couple of Ethereum, and now I'm going to use that Ethereum as the collateral to take the trade. Whereas many of you may be used to taking a trade in the sense of USDT and it's denominated in USDT, right? This amplifies the upside potential if the trade does play out. Of course, it's a double-edged sword, because if it goes against you, your ETH spot position is going down and you're losing due to the leverage. So you need to calculate. But if you have high conviction on a particular position and you believe things are going to run, this is the exact approach that I would usually take to take this type of trade, right? I actually explain it at length. We can quickly go over there. If you go into my Twitter account and you go to my profile, I retweeted this yesterday, right? So we can go through to my profile and we'll have a look for it. Where is the tweet? Here it is. I actually explained this at length, and we're going up to Phemex. You should get in for free, and then you can join into the next cohort, which starts soon. So the 5-point entry approach, we look to scale into orders in order to minimize risk. If you want more information on that, go through to my Twitter account and you can watch this, and then also unlock the lessons over here where we discuss this at length, right? So we're going to go for the scaled order approach, where we're going to take it as a CoinM margin futures trade, which means we're using ETH as collateral. So, of course, the first step is you need to go through to the link. You need to sign up, right? Sign up to Phemex. Also register over there to get your sign-up bonus. Once you've gone through to that, make a deposit, go through to your deposit section over there. I've deposited Ethereum directly into the exchange, and now we're going to get ready to take the trade. And if you are a whale and you want to trade on this tier 1 exchange, remember, you can also send them a message if you do want to qualify for the VIP standards, right? So VIP 1, your savings compared to being a non-VIP would be $1,260 on trading fees. If you go all the way to star VIP, you could be saving almost $100,000, right? $85,000 on trading fees. So here's the trade setup. Where do you go? Well, once you've deposited Ethereum onto the exchange, you're going to be going through over here to futures, coin, margin, perpetual. So you click on that. And then, of course, we're going through to Ethereum, right? So there it is. Let's just let that load up. All right. We'll go through to this. There you go. Inverse. It's inverse perpetuals is another common word that they utilize for this. And we want to go through to, of course, ETH. So let's have a look over here. And we want to go to ETH. Where is our ETH perpetual trade over here? ETH. Let's just quickly have a look. 1 second, guys. Sorry, my computer is a bit laggy today. I do apologize. Coin margin perpetuals. Let's just try that again. All right. So while we wait for this, again, guys, get ready for the trade. I'm going to take this trade live today, right? So ETH. There we go. ETH margin. ETH. It should be ETH margin. Hold on 1 second. Where did this trade go? ETH USDT. Give us a second, guys. I just had it. Let me just go back to where we were. My computer actually froze just before we started with the stream. So I hope that I'm still with you guys. Guys, just let me know if you can still hear me, if everything is fine. And we'll go back. All right. Let's go. Okay, there we go. Finally got to it. Okay, ETH USD perpetuals. So I'm going under, usually you'll see this, right? Limit order, and then you can take the trade like that. In this instance, I'm going to scaled orders. So clicking on scaled orders, I'm going to go with a scaled order. My margin, I need to set it. Remember, we've already pre-calculated this using the position size calculator, and I told you I'm running on 5x leverage, right? So 5x leverage, and let's drop that down. I'm going to go into isolated because that means I don't jeopardize and risk the entire account. And we're going to drop this down. All right. 5, there we go. Let's confirm it. Okay, so we got that. The ETH is already deposited. You got the lowest price and the highest price that it says over there. This is where you're going to determine how to scale into the trade. So if price does come down a little bit, this is how you reduce your risk. Since we have price, we now have to enter a little bit higher since I planned the trade setup. Unfortunately, I bought the ETH yesterday down here preemptively for this particular show. So what I'm going to do is I'm going to scale my orders from current levels down into the bottom of the range. I'm going to say, you know what, maybe price just ranges between these two levels and you bounce around like that, but the premise still remains that the trade plan is the same. So down into the previous month's low. So we're going to go from 1806, right? So the lowest price is what? What is the lowest price? The previous month's low, 1758. So we're going to enter into this trade from 1758, right? 1758. And we're going to go to the highest price over here, which is going to be current price, 18. I'll go 1806 to just get some of it filled in case there's some movement right now. And I've already pre-calculated the amount of ETH that I want. I'm looking to take the trade with all of that ETH, right? So let's have a look over here quickly. All right. So we're going to take the trade with all of the ETH over there, right? Quickly going on, if you are trading on Phemex, over here, in terms of tax reporting, right? They're actually partnered with Coin Tracking and Coinly. What this means for you is ultimately you don't have to stress. You just click to download it and it seamlessly integrates with that. It will do all the reporting for you, right? The other thing that we're looking at in terms of a trade potential, which is coming up, which I want to outline to you guys, is the gold trade, right? Let's quickly see how gold closed on this week. Okay, so we have a potential spinning top over here on gold coming into a very, very key high. What we want to do is we want to see if gold can start to break this level over here. I'm going to be looking on the high time frames, at least the 3-day time frame, right? We want to see a break below this level. If you can start to see this break below, put in a lower high, that's going to open up the gold trade. Remember, you can trade gold as well over here, Pax Gold. There it is, Pax Gold on Phemex. So use the link in the description below, sign up. Remember, this will get you as well into Whale Room. And those are the two trades that we're looking at. All right, what else? We can have a look at a couple of the other trades. If there is anything specific that you guys do want to have a look at, keep in mind, if this does start to break below the Monday high, that's probably your time to exit. Determine for yourself if you want a hard stop loss or if you're looking for acceptance to be gained underneath the Monday high, would be looking something like that. All right, guys, that's it from me. Thank you so much for watching. Appreciate each and every single one of you. I will catch you all on the next one. Have a great day and cheers for now.